Hi, I'm Ashley Osborne, PropTech pioneer and CEO and co-founder of Devour PropTech, the digital platform that levels the playing field for smart property investors. And today I wanted to talk to you about property taxes. If you want to be a serious portfolio investor or even just an individual landlord, then you can't make successful investments unless you understand how real estate taxes work. After finance costs, taxes are going to be your next largest cost. Now, the first tax that you need to think about are purchase taxes. Now, most often they're called stamp duty or transfer taxes. Now, these are the taxes that you pay when you purchase a property. And there's a couple of things that you need to think about. Firstly is what additional surcharges might there be as either a property investor or an offshore investor. So those sorts of things you need to make sure that you don't get caught out with. But also, what are the hidden costs? There might be some additional costs in the form of mortgage leverage, levies, and other taxes that go with purchasing. You just need to think about what they are, why you're investing, and how they might impact them. And most importantly, you cannot borrow that money as part of your mortgage. So this is additional cash that you will need to come up with when you purchase your property. The next tax that you need to think about is income tax. Now, income tax is really important if you're purchasing to generate a yield, because it's not the gross rent or it's not even the net rent. So the rent after service charge and all the additional charges you'll pay just to manage the property. The important thing is to know is what is your net income after you pay your income tax, because that's what you actually put into the bank. And that's going to be sort of impacted by two things. Firstly, it's what tax rate do you actually fall within? So the more money and that you generate within a country, the greater that you'll move up a tax band. So it's likely you'll pay more and more tax in terms of the income that you generate. But also, and perhaps most importantly, is what is taxed, because it changes a significant amount depending on country that you're in. So for example, in places like the UK, you can't offset a significant amount of your mortgage interest, whereas in places like Australia or New Zealand on new build property, you can offset 100% of your interest costs against your tax liability. And likewise, in places like Australia, you can depreciate your asset, and that gives you what's called a non-cash expense that you can offset against your income tax every year. So it's really, really important to understand those things, especially if it's yield that you're trying to generate. The third tax that you need to think about when you're looking to purchase investment property is capital gains tax, or the taxes that you're paying when you sell the property if you want to sell. So they change again pretty significantly between different countries, and also depending on where you live, what you do, and how long you've owned the property for. So it's a really, really important consideration, because if you're buying for long-term income, capital gains tax perhaps won't be much of an issue for you. But if you're buying with the idea of owning for a relatively short period of time to trade, to try and generate some long-term wealth for your building a different type of portfolio, then capital gains tax is a really important cost. And it's really important to understand not only how it works, but the timing of how it works. And the final tax that you really need to think about are estate and inheritance taxes. Now, these change from country to country. Some countries have estate taxes, some don't. And again, it's really important that you understand what they are and actually if they're even applicable. And that really the difference is with an estate tax, the tax is taxed if you pass away against the estate, whereas an inheritance tax is taxed on the person that gets the benefit of whatever's passed down from your will. And in many countries like Australia and New Zealand, there are no estate or inheritance taxes. So again, it's really important from a portfolio planning perspective that you understand what they are, and what strategies can you implement to try and mitigate those taxes in the future, because at the end of the day, everybody has an end, and it's important that you plan for what that looks like. That's it for today's video. I hope you enjoyed it. Please check out the rest of our videos. We're building a big library of information that we think is really helpful for smart property investors to help them make more informed property decisions. So check them out. If you like our video, please like it, leave us a comment, follow us. We'd love to hear from you. Thank you very much.